Hello and welcome to another episode of the Smaulgld Subscriber Sound Off series. Today I have a returning guest, Rhenf, and today we're going to be talking about the dollar as reserve currency, alternatives to the dollar, Donald Trump and the dollar, the Fed and the dollar, Bitcoin and the dollar, pretty much all things dollar. How you doing today, Ant?
Hello, Lewis. Glad to be back again.
All
Maybe I think the fifth time.
Certainly is. We're past the third time being a charm, and now we're just being charmed, right? All right, let's get right into the topic. So, we have seen a lot of stories, a lot of thought put into the dollar, and most of them revolve around what is the alternative to the dollar, and the assumption is at some point the dollar will no longer have its hegemonic status and dollar will not be the world's reserve currency. And what would that mean? Now, before we get into, we'll assume that that is a possibility, but then we have to determine what would the aftermath be like, and if such an aftermath is no better or no worse, would that necessarily mean then the dollar would lose its reserve currency? Your thoughts? World's reserve currency status.
Well, the first aftershock of the collapse of the petrodollar would be the end of America's exorbitant privilege, as it was called, after the Bretton Woods system. So America could no longer run trade deficits. It also, with the situation as it is now, as the corporations have exported all their labor and plant to the east, they would have no production either. So I think the loss of the petrodollar would be catastrophic for America in the short term, but in the medium and long term, it would actually be beneficial because the centralized and the corporatist manufacturing system is already been offshored. America would basically have to start from scratch and build its own production up, but it could run no deficits, so they'd have to produce. So on the flip side of this would be whoever takes the mantle, if they could take the mantle of world reserve currency. So you hear a lot in the Goldberg sphere, for example, about the yuan coming the world reserve currency. Well, if the yuan became the world reserve currency, then China would automatically have to start running a trade deficit. So they'd have to consume more than they produce. And with whatever was happening in America at that time, I'm not sure where they would find the consumption to prop up their international world reserve currency status. So switches in world reserve currencies are not that easy, and they will have many fallouts out of it.
Now, what did you say, though? I mean, what you said was that you gave the consequence, but it almost sounds as if that would happen right away, meaning that the U.S. would have no productive capacity and it would lose its status, and then it would have to start from the ground up. But do you see, in some respects, policies in place that are designed to make the transition, meaning to move the United States more into a productive type of country where it produces more of the goods that it consumes at home, and then China becoming, for example, as a result of the tariffs, a country that exports less of its goods and starts to consume more of their goods at home. And so it wouldn't happen on one day where we are right now, and then all of a sudden the dollar is not the world reserve currency and they'd have to start from scratch, but more, are we actually heading towards that through, perhaps, I think as you suggested in the pre-call, as a planned strategy that you think the Trump administration has?
Well, if you look at who's complaining and bitching about these tariffs the most, it's China.
Mm-hmm.
So China likes the situation we're in more than America, I would say. You know, because China gets to export all its stuff to America, and what what these tariff trumps are really doing is disrupting this, you know, post, I think it was the Shanghai Accord or the WTO, when China, you know, it was the start of the 90s when China started rising as a power,
Right.
Which was, you know, Trump always talks about the previous presidents that let this happen.
Right.
So I think it's, China does not want to rock this boat. So I think where you're really seeing the boat being rocked is Trump with these tariffs. And, you know, Trump's mantra from the start has been make America great again and America first. And so I'm coming to start to appreciate that. I think that one of the key tenets of America first is a reduction of the US petrodollar as a world reserve currency. So I think this is behind some of the tariffs, and this is behind the sanctions.
Okay,
So,
and what are the advantages of that? Because when most people talk about the end of the petrodollar, they talk about it in terms of it being disastrous for the United States and that it's not a good thing. And I think a lot of people don't look at the side. They say it's an exorbitant privilege, but it's also a burden. Are you saying that it would actually be a good thing for the U.S. petrodollar to lose its hegemonic status?
in the short term, it would be catastrophic, but in the long term, it would be a beneficiary. I've argued this in most of my blog posts and in a couple of interviews with you that, you know, the world reserve currency is more of a curse than a blessing. In the fact that you have to run these trade deficits,
right.
You have to hollow out your own economy, you have to consume more than you produce, and you have to subsidize through your consumption others' production.
Mm-hmm.
So you know, America's subsidized the rise of China as a, you know, a commodity and industrial powerhouse. You know, because they have got a massive land mass and labor population, so, you know, they've got the resources, but also, you know, America's corporations decided we're not going to pay American wages, we're going to ship them out to the east. So, you know, when we're talking about these tariffs again, I think that Trump knows that, you know, the petrodollar as world reserve currency is on shaky ground, let's say. So I think another object of these tariffs is to try and, you know, bring back as much manufacturing and production as they can before they lose.
But wouldn't that, excuse me, but wouldn't that reduce the potential catastrophe you're talking about if they do it gradually?
Yeah, for sure. But, you know, there's going to have to come some time when the thing is, you know, it maybe doesn't have to be a world reserve currency anymore. You know, I keep hearing everywhere in the media bilateral currency trade. You know, we've got Trump has put sanctions on Russia again, or to be more specifically, he's put sanctions on some oligarchs, billionaires, more than actually against Russia. You know, I hear everywhere that, oh, he's hitting Putin and Putin's allies, but, you know, if you look into people like Bill Browder and Khodorkovsky and the big one is Deripaska, they're the ones being sanctioned, and, you know, traditionally they've been Putin rivals. So maybe Trump is also helping Putin out by, you know, weakening and hurting the profitability of his oligarchs and rivals. But he you know, Trump has also put sanctions on Turkey, so and Iran. So you keep hearing at the moment about this, that the Turks and the Iranians and the Russians are talking about doing bilateral currency swaps in lieu of, you know, holding reserves in dollars. So you know, when you look at all what's going on, all the moving pieces, you know, I get the distinct feeling that this America First is basically about forcing everybody else out of using the dollar.
Okay,
at the moment.
Okay, so if they're forced to moving out of the dollar, that doesn't necessarily mean that the dollar will not be held as a reserve currency. And here's my thinking. if you are, let's use your trilateral arrangement. Let's say Russia and Iran and Turkey decide they're going to trade amongst themselves, and let's say using domestic currencies. I would still imagine, however, when they wanted to hold, or in individuals' terms, preserve their wealth, in other words, hold their reserves, they're going to hold them largely, I would think, not in Russian rubles or Turkish lira, but in dollars. And then, of course, they would convert those to do the bilateral trade. But I haven't seen a move away from, if you look at the reserve tables of what central banks hold, they hold primarily dollars first, then euro, then I think British pounds, Japanese yen, Canadian dollars, Australian dollars, and then finally about 1% of Chinese yuan. So I think that they could trade amongst themselves, but that doesn't necessarily mean, with alternative currencies, that doesn't mean that the dollar is still not valued as a reserve asset, which, if that's the case, that doesn't necessarily harm the value of the dollar, because if it's still held and still desired, then it doesn't mean that the dollar, quote, collapses, and therefore you'd have hyperinflation in the US. Now, we've seen countries like Iran, Turkey, Venezuela have their currencies collapse, and then of course they have the hyperinflation. But if countries that are trading amongst themselves in their own currencies are holding dollars, there's really not much of an incentive for the dollar to collapse, or even a economic rationale, or is there, for the dollar to actually lose a lot of value just because it's not being used as much in trade.
Yeah, perversely, it's look like it's governments that are trying to cut it out at the moment while the people are looking to hoard it. For example, if you're in Venezuela, you're talking, they talk about Bitcoin, but I would imagine that most of, the currency exchange that happens in Venezuela outside of the bolivar is in dollars.
Yes.
The same in Turkey.
And then silver, and then gold, and then Bitcoin, and then Litecoin. Anything but the government currency.
Yeah. So, we'll have to see with this, because you would think intuitively that if these currencies go to bilateral trade, then the dollar is cut out, then the influence of the dollar will wane. You look at, for example, U.S. Treasuries. Turkey's dumped most of theirs now, and Russia are nearly down to the bone. But these are two small players.
But that doesn't mean. But hold on a minute. That doesn't mean they're not holding dollars. It means they're not holding treasuries. They're not holding them long term. But for the liquidity purposes, they still have plenty of dollars.
In which form are these dollars? In the banks?
They're in they're not in treasuries. Yes.
So they're in T-bills are.
Yes, and the same with China. China runs a dollar-based economy as well.
Yeah. But you're talking China has, I think, still got over $1 trillion in U.S. treasuries.
Yes.
So has Japan.
Yes.
And I think how much
foreigners have about 20% of the overall treasury position of, I think it's like 60 trillion, some ridiculous number. That's outstanding. But there are trillions and trillions of dollars that are not held in the form of treasuries that are all over the world, and that's where they're claiming there's this dollar shortage.
Yeah, we're talking the euro dollar, yeah, and this is big. I've read quite a bit of Jeffrey Snyder. He's Alhambra Partners. I think he's one of the best guys on euro dollars specifically. These are basically dollars that are issued outside the United States, and I've listened to hours of his material, and I'm still struggling to get my head around what an euro dollar is, because it's not a dollar. It's a dollar that has been leveraged outside of the US, so it's a fiction. But they're part of the accounting rackets, and so there are trillions of these euro dollars. But as you say, with the Fed tightening and the quantitative tightening starting to bite now, you've got this dollar shortage, and which is reversing this decade-long dollar carry trade that after the crisis in 2008, they lowered interest rates and they pumped all the money, and then every country individually then, so we're talking, Japan, China, emerging markets, they all base their carry trade on the lowering cost of dollars to fund their own, fractional reserves on top. And now that the Fed is hiking rates and tightening liquidity, this shortage of dollars is driving up the costs of maintaining this carry trade. And what you've been seeing the last 6 months is the blowing up of emerging markets. So we're talking, well, Venezuela's been for a while, but we're talking Argentina and Turkey. All these countries' currencies are starting to blow up now as the Fed tightens liquidity.
They need dollars, and dollars are more expensive. And the way I look at it is, if a dollar is more expensive and the dollar index is higher, then the dollar itself isn't threatened. It's really those other countries. And I think, to your point, what happens then is they need to figure out how to get out from under it. And then, but they're at a position of weakness because now they're asking each other to say, the lira really is bad, the ruble's not doing very well, the Iranian rial, wherever it is doing badly. Let's trade with that. And that doesn't strengthen their currencies.
And this tightening dollar is again forcing countries outside the petrodollar, which is another angle of this de-dollarization or, America first policy of Trump's. I think this is how the economics are working out, that it's becoming too expensive for these countries to transact in the dollar.
But you see, this is where I differ, not with you, but with the people who are claiming that de-dollarization is somewhat of a form of weakness in the dollar. It's actually, the way you're describing it, it's because the dollar is too strong that they can't live. If you're looking for another microcosm of this situation, you'd look at the EU and you would look at what's happening in Greece and Italy compared to Germany. So Germany, as an export-driven market, wants a strong currency, but the Italians and the Greeks would desire a weaker currency. Correct.
And if this was an actual free market and national currencies could float against each other, you would see a far weaker Italian and Greek currency than the German currency.
And they would be quantitatively easing themselves, not at the euro level, but at the lira and drachma level, so that they can print their way out of their problems.
Yeah, but if they were weakening against Germany, they would also be incentivized not to print. I know, they might still
within a range. That's right. They would have to take.
Then you'd get a currency run. So what's happening in the euro at the moment is these countries are stitched together, and then you've got these target 2 liabilities. So that's basically an internal transfer from Germany, who runs the surplus, to the countries that run the deficits. Europe is a basket case, and Europe, I might say, is far, far weaker than the US. So if we're talking about the end of the euro is a world reserve currency, like it or not. I think it's the second currency after the dollar.
Yes.
But I see the euro going into the dustbin far before the dollar does.
Right. And the same. What about now? The same applies to the Japanese yen, and you have to go all the way down to China. I think China currently is in the worst position for anyone to want it, because they have capital controls, they have a debt to GDP that's even higher than the United States. Their whole economy is based on credit creation, that if they were to have to show some restraint, they never could. The one reason the United States never went to negative interest rates, I think, and the reason they've raised rates, is to preserve that demand for dollars. Because why hold something that pays 0 interest rates or negative interest rates when you can hold dollars, and dollars are already what most countries want? I think the dollar's position has strengthened over the last 5 years, especially since they've stopped doing QE and have encouraged the rest of the global fiat Ponzi scheme to do it. I mean, EU's QE is now larger than the US Fed's was. Japan's been doing it for 20 years. China has decided that the best way to attack the tariffs is to forget that they ever even said the word deleverage, and they're they've decided they're going to print more. They're going to do more infrastructure. They're going to subsidize more of their state-owned enterprises. They're going to try to do more Belt and Road and export their debt-driven build and see if they come scheme, and that doesn't seem to be working for them. So my whole issue with this end of dollar hegemony, end of the petrodollar, if indeed there has to be a replacement, I don't see how any currency, at least sovereignly issued currency, has any shot at gaining any confidence that you'd want to hold it. And the only reason the dollar has the confidence is because everyone else holds it, and they figure, well, this is what everybody wants, so I want it too. And again, they don't look and say, well, the U.S. has 150 trillion worth of unfunded liabilities, $20 trillion deficits. But if you were to take that analysis and look at all of the other countries, they all have the same thing or worse. Plenty of deficits.
I think there's only two currencies that can take down the dollar, and that's gold or Bitcoin. So
okay, I won't disagree because they're not debt based.
The only country I believe that could dethrone the US dollar, and it wouldn't really be as a fiat currency, would be Russia. So say Russia decided, Russia, in my opinion, is the only economy that could conceivably go back to gold backing or a gold standard.
I agree, because they have low debt. They have
low debt, high interest rate, high cost of capital. That's
resource-based oil,
resource-based agricultural net exporters and commodity exporters. So they produce
18% of their reserves held in gold.
Yeah, they've got 2,000 tons of gold.
And they're the 12th largest economy. But having said that, there's not a lot of confidence in a country like that, as you say, which is run by oligarchs and does not have a diversified economy.
With a fiat currency.
Correct.
Say now that the ruble went gold backed, then I would expect, a flood of capital to enter Russia, wanting to hold the ruble because it's gold backed.
And and the reason they could gold back is their economy is not based on issuing debt. The way when people talk about gold back yuan, they have no idea what they're talking about. China would never, ever, ever back yuan with gold. They are addicted to debt. The whole economy is based on issuing debt. Whereas, as you say, Russia's is not based on issuing a lot of debt.
The gold standard you would call probably a laissez-faire, classical liberal 19th century concept.
Yes, not like Bretton Woods.
China's run by communists, and communists want to print more money. So
clearly,
I think China's banks have printed something like 70 or 80% of the credit in existence now since 2008, 2009.
That's correct.
So their banks are 5 times more leveraged than Western banks.
Yes.
So the thought of China going back to a gold standard is laughable.
It's totally laughable, but a lot of people in the gold community actually believe that China is productive and that China has got some type of laissez-faire economy and that they have so much gold that they have no idea that the amount of gold China has is not even anywhere near able to cover the amount of debt that they have. And their debt not only is debt, it's bad debt. They've estimated certain industries in China have upwards to 40 to 60% bad debt that they just roll over. The People's Bank of China just says to the state-owned banks, lend them more money, convert it into equity, do what you got to do, but don't default.
Well, you see, they can only maintain these debt costs as they are by printing more money and lowering interest rates. So, this quantitative
or devaluing the yuan.
Yeah. Exactly.
So how are you going to have a world reserve currency when
that devalues?
that has to devalue to keep its domestic. That's why China would never want it.
No.
And they're certainly not going to tie it to gold.
See, it is a curse. The world reserve currency is a curse. And so when you look at America now, so we're talking the Fed, and Fed makes policy exclusively for America, for America's people and America's businesses. So they fiddle with short-term federal funds rate, which normally pegs the two-year Treasury yield, and then they juice or contract at the long end, which is called either quantitative easing or quantitative tightening. So they fiddle at the long and short and long end of interest rates, but this is explicitly for the domestic economy. But the dollar is a world reserve currency,
right?
So this interest rate meddling blows up everywhere else,
right?
first, except for America.
And China would be the same. And China would act in its national interest if it had the word. And that's why it doesn't want it, because the yuan would get crushed even more if they realize that this is what drove people away from the dollar, was when the United States decided, the Fed decided in 2008, we're going to do QE. That's what freaked out Russia. That's what freaked out China, that the United States would do something to get its own economy out of it, or even to help the world economy, would do all this money printing. And they said, whoa, whoa, we have all these treasuries. What are you doing? You're undermining us. Well, China would have no trouble, and has no trouble, doing, as you mentioned, creating 70–80% of the credit in the last 10 years. They clearly would do the same thing and they wouldn't care whether they were the reserve currency or not. And that's a reason why they never will be. They have to, because the United States had a trouble. They were talking about, well, there might be martial law if we didn't lend the banks all this money. Imagine the Chinese issue with maybe 30, 40 cities that have millions of people in them. All of a sudden, they don't have work. What are they going to do? I mean, Tiananmen Square would be filled, and it would be a disaster. So they have to act.
It's another drawback of having a socialistic or communistic economy where you employ maybe, I don't know, 30–40% of the Chinese population.
Right.
You know, if
through state-owned enterprises funded by
state-owned enterprise go down, and all those labor jobs, they go out to work, then they can't get more work and they start rioting.
Absolutely.
So, you know, people say China is the strongest country on earth. I'd say the truth is probably the opposite, that they're the weakest country on earth, in my opinion.
Well, the other thing I was mentioning in the pre-call is one of these theories they throw around all the time is, no, they're not. You see, they just haven't realized that instead of selling their stuff to the United States and Europe, all they have to do, flip a switch and sell it to themselves. Well, there was a guy on, I guess his name is Ikrit. He said, well, that's nonsense, because China doesn't have 1 billion consumers. They probably have like 150 million along the coast where they can buy stuff, but the rest of the country isn't rich enough to buy stuff. They still live out in relative abject poverty on 70–80% of the rest of China. So it's not like China could just say, well, screw the rest of the world, we'll just consume all this stuff at home. It would be, they could not support their state-owned enterprises solely on their domestic economy.
You know, we also talked in the pre-chat about, you know, we're talking maybe 2.5 million people in the world are banked, which leaves about another 5 billion that are unbanked. So the Western governments and their banks have been able to infiltrate, you know, the Western public with digital currency far better than the East have. So, you know, China's banks, the banking networks and infrastructure, I don't think are as developed to take world reserve currency status, and you know that would automatically mean that they would be they'd need to exploit their own population more.
They're not going to be able to get away with that.
No, you know, it's something of the same thing in India, really, isn't it? You know, they've tried to ban cash and go to a, you know, cashless totalitarian shithole overnight. But, you know, if you understand anything about India, you understand, you know, that most of the population live really through cash and not through credit. You know, you go into the back of beyond of India, and I doubt you've even got electricity, never mind an internet connection. So, you know, I think people think that the rest of the world is like the West, right, where it's really not.
Well, I think that, you know, when you start with the idea that you're trying to create a scenario where gold goes higher, and anybody who holds an asset does that. Bitcoin's going to go higher. They just they start at the result and they try to get themselves there without, and overlooking, as you mentioned, some of the factual issues about, are these countries even equipped to, are they what you think they are? I mean, just because China has a lot of gold doesn't mean that they don't have a lot of debt and they don't have a lot of other issues. All right, let's now move over to Bitcoin, because you did mention that the only currencies that could become trusted enough. I agree with this. I mean, for all the flaws of the dollar, it is the best fiat currency. There's nothing. I mean, as you say, the euro's second, and that's not even close. Bitcoin, gold, silver, some type of commodity. Now, how would that work? And is that even a possibility? Because I could see countries deciding, for example, Turkey, Iran, Russia. What I would do if I were those countries and I didn't want to rely on the dollar, I would do swaps of oil for gold, gold trade notes. I would create benchmarks between the commodities they're trading and set up somewhat of a barter situation for the large import exports that weren't necessarily currency based, because if you have to trade in those currencies and they're benchmarked against the commodities, as we know, the Iranian, Russian, and Turkish currencies could fall dramatically. Then they'd have to hedge and swap against those to prevent that. It might be better just to trade the commodities. But how would gold or silver or Bitcoin or anything other than a sovereign currency work in the international financial system? Do you believe in the concept of a reset, where all the countries decide they're going to reset and they're going to add gold to it, or they're going to do an SDR? What's your thoughts on how countries might adapt gold, silver, cryptos, whatever, into some type of either regional financial system or global financial system?
Well, you know, the why I think it's a certainty that fiat money is going to be replaced by gold, silver, and Bitcoin is because they're scarce currencies, so you can't print them. That's the major difference.
But do governments want that?
No, but you know, even though you know, like I said, the difference between gold and Bitcoin is gold is a commodity and it's never had a ledger. So what they've done is build their ledgers on top of gold, and then used the ledgers to rig the gold price to give the mirage of abundance, where in fact gold is actually scarce. It's a psyop. Now the difference between gold and Bitcoin is that Bitcoin is a commodity as defined by the CFTC, and it's got its own ledger. So, and this ledger cannot really be rigged. You know, the price of Bitcoin can be manipulated and rigged by exchanges, but the ledger can't really be rigged. The Bitcoin's either there or it's not.
Right.
So, historically, banks and central banks have held reserves of gold. Now, it doesn't mean that they've actually, you know, honored that gold. They've always issued fractional reserves on top, but they've always held gold as a reserve. And, you know, still do, and we have this recent example of Turkey liquidating $500 million of gold. And, you know, now you know why Turkey held gold. Because, you know, if the real sells off 50%, you know, and gold holds stable in dollars, then you've got double the reserves that you had. So I think this is also an alley that banks and central banks will start going into with Bitcoin. They may try to ban Bitcoin for the general public while holding reserves of Bitcoins themselves. So they could hold Bitcoin as a reserve asset, but you know, as there's only 1,800 Bitcoins a day issued at the minute, you know, if a central bank decided to do a large purchase, then the price of Bitcoin would have to go nuts, simply because there's a shortage of liquidity of Bitcoin.
Well, hold on, but isn't the problem with holding Bitcoin as a reserve asset is that unless you held it in very small amounts, your value, the value of it would fluctuate, which would mean the value of reserves would fluctuate, which might mean that might impact your currency value, which would not be ideal to hold as a reserve asset if that were to be so volatile.
Well,
so you can hold gold because
they a hedge.
Yeah.
Gold, you know, everybody keeps telling me that gold is stable, and gold,
it's not that stable.
I'll tell you back. Well, gold is stable because it's being rigged.
Yes,
you know,
that's my point. Well, I was going to get to that. Continue. Because they'll have to rig Bitcoin in order to make it a reserve asset.
Yeah. If gold wasn't being rigged, then gold would be volatile.
Yes.
And it would probably go more up than down,
correct,
same as Bitcoin. So, you know, even though they have short-term volatility fluctuations, I think that won't stop central banks from holding Bitcoin as a reserve asset, and you see the more banks start to hold Bitcoin as a reserve asset, then the less Bitcoins are out in circulation, and therefore the price just keeps going up.
Now, it could be when the price of Bitcoin gets to a certain level, because central banks buy it, that it might become more stable. I've thought that maybe if Bitcoin, once they're all issued, and that'll be what, in about a year or two, the last Bitcoin?
Well, no, they talk about 2140, yeah.
But yeah, but essentially,
20.5 million of 21 million would be mined somewhere in the next 10 years by 2040 or something like that.
But really, in the next 2 or 3 years, you'll have 80–90% of them already mined.
Yeah, there's another halvening in I think it's April the 11th, roughly 2020. So
so if central banks were to start to buy, and they don't have to buy many, they only have to buy a few hundred each, I think that would drive the price up to a higher level, and it would start to stabilize. My target has been, for want of a round number, $100,000.
Yeah, there's been talk of $100,000 Bitcoin by maybe the end of 2020 or the end of 2021, because this halvening, in I think it's April next year.
What's his name says $1 million. What's his name? McAfee.
Yeah, it goes from the Bitcoin issue goes from 1,800 a day, so I think that's 12.5 every 10 minutes at the moment. It goes down to 900 every day in 2020, which is 6.875 per 10 minutes. So this is the thing about Bitcoin, is that the longer it goes on, the more liquidity dwindles. So issue is hard coded into the protocol so that it's deflationary, which means that more people will want to hold it, and therefore its price goes up, including I believe eventually, and this might not be the strongest banks. The Fed or the ECB or the Bank of England would shun Bitcoin.
Yes.
If you're talking the Zimbabwe Central Bank
or near Nigeria, they have talked about it.
Argentina, Venezuela, I think there's many banks now that are more desperate for some kind of sovereign, because this is the thing about Bitcoin, like gold, it's a sovereign asset. It's not part of the fiat system, and it's outside. So
well, they can use, instead of going on the SWIFT system to pay, they could just go on the blockchain, and no one would be any the wiser that Argentina, they could evade sanctions that way as well. I think that's one of the things the U.S. Congress is looking at, is how do we stop, and I think the answer is you don't, sovereign entities from using cryptocurrencies to evade sanctions. I mean, it's the same. How do you use gold? It's the same thing. You could tell them, you could try to track gold import exports. That would require you to be, monitoring sea trade, which is very hard. But to stop a payment from one country to the other in a cryptocurrency, it'd be impossible.
Well, it's the same as gold. You'd have to break the law. So, we'd talk a massive Bitcoin or gold smuggling triangle, or whatever you want to call it.
But at least you might be able to intercept a
boat.
You
can ban Bitcoin, but you can't. Yeah, you can ban Bitcoin, but you won't stop it crossing borders. It'll just become more underground, and it could be smuggled. But
I think that the threat of the ban is more disincentivizing for individuals, because they can come after you, arrest you. But for a country that's already under sanctions, all they can do is at some point just invade you if they wanted to enforce the ruling, because you're already under sanctions, and so they're going to try to continue to do trade as any country would do, and they're going to try to do it in a way that they're allowed to do. And if they're not allowed to use the SWIFT system, what are they going to do?
Well, I've talked about it in a past post. An example of this would be I think it was a German bank who held Bitcoin reserves and a Japanese bank who held Bitcoin reserves. They wouldn't have to use SWIFT or go through any kind of national fiat currency exchange. They could simply exchange the Bitcoin.
Right. Now, there is a question, I don't know if you saw this, but there is a point, though, however, where you do have to take, in most instances, at least now that there's not a highly developed cryptocurrency ecosystem, you're going to have to get back into the system, and that's where they call it laundering, because then the Bitcoin gets converted into the host fiat currency, and the way that's done is through a bank. Now, what happened in India is the Reserve Bank of India has shut off crypto exchanges from using the banking system. That doesn't mean that you can't trade Bitcoin back and forth amongst yourselves in India. It's just that through the exchange, you can't then cash out into rupee. So, but again, if you're in Venezuela or Iran, wherever you are, and you exchange the Bitcoin, you can then convert it into your home country into the dollars and then throw them back onto the SWIFT system.
This is also something I've discussed many times in my posts and in my interviews with you, and that's you know, the extent to which governments will regulate Bitcoin. So the advantages of regulating light touch, as I'll give you one example they've done in Japan, is that you can skim fees, you can skim taxation, and you can keep, you know, a pretty good surveillance system of your users.
That's my view as well, yes.
Whereas if you ban Bitcoin, like say China's done,
or what India is doing in a sense with the banks,
and India is doing, then you drive Bitcoin underground onto you know, decentralized exchanges such as local Bitcoins or BISC, or and then you lose your fees, then you lose your taxes, and then you lose your surveillance capabilities, because, you know, it's a direct bank transfer between bank, you know, whoever holds the Bitcoin and whoever holds the yuan, but there's no record from the government that that transaction was used for Bitcoin. It's just one bank, you know, banking entry going from one account to the other, unless they put Bitcoin as a reference or something.
Right.
The Chinese. So if you ban Bitcoin, you know, and you start the smuggling trade, then you kind of lose all taxation and surveillance capabilities over it, which means, you know, your government is going to run out of money faster. Right. So this is the, you know, I've called it a deal with the devil, Bitcoin and banking. So if banking embraces Bitcoin in order to get fees and taxation and surveillance capabilities, they get to live a longer life.
Well, that is what's happening. The United States, and when I hear people say that they're going to ban it, the United States has taken the view, and it seems like they're doing everything possible. I mean, you have Goldman Sachs, you have venture capital from Silicon Valley, Wall Street money moving into cryptocurrencies for the sole purpose of trying to create payment systems. They're trying to latch Bitcoin into the payment systems. They're trying to take Coinbase as a payment processor. They're going to become SEC registered. As you say, once they're all under that purview, that doesn't take away from the privacy elements that the currencies themselves have, but they move a lot of the value of it into and under the surveillance and the tracking and the taxing. And thereby, what they do is, let's say the Bitcoin right now is worth $180 billion. If they can move 130 billion of that value into ETFs and into trading platforms, they're not as concerned about the other 50 billion, because they can still put resources into tracking bad acting. And it doesn't mean that the 50 billion that's outside of the system is all bad acting. It just means it's outside the system. And I think that's a much more sensible approach, is that if you want mass adoption, most people are comfortable with regulated products. And I don't see why people wouldn't go for it. And if people want to be outside the system, they can. But also, criminals are going to be criminals whether they're using Bitcoin or they're using gold, or they're using cash. I think it's a much more sensible approach to try to bring as much under the umbrella as they can. And that gives them resources. Not only do they make money doing that, that frees up resources to go after solely bad actors, because under surveillance they can see bad acting right under their nose with the exchanges, like manipulation.
You know, regulated exchanges also allows them to manipulate the price.
Correct. That's what I would add into. If that was my point when we were talking about, if they want to make it a reserve asset, well, then they have to be able to regulate the price as well.
Yeah. So we've had futures now roughly a year, and you know, many in the gold community and elsewhere saying that, you know, Bitcoin's now permanently rigged because of these cash settled futures, exactly like what happened with gold. But you know, I'm watching developments now, such as this new backed exchange I think it's launching in November.
Microsoft, Starbucks, yes.
And they're offering the fully collateralized Bitcoin backing. So you know, these will not be cash settled. So I think.
Well, they have an interest in wanting them to go higher. I think they want ICOs registered with the SEC. They want to create the next.
Yeah,
they want to create the next Netflix. They want those ones, the Teslas. They want ICOs that are going to go up 30, 40 fold.
Yeah, and I think, to be honest, I think Coinbase are now pivoting away from retail and
absolutely,
and towards institutional buying and selling. So I think that's why they've gone for the BIT license and they're asking for full regulation by the SEC. So,
same with Bullion, same with Gemini, same with all the U.S. exchanges, which, by the way, are backed by, directly or indirectly, Wall Street banks or Silicon Valley firms.
Yeah. So this is the.
It's not dark money.
No. I think this is just. I think this is Wall Street's safest way of dipping their toes into cryptocurrencies, and you've still got the development of decentralized exchanges and everything outside that ecosystem. But you will definitely, in most countries, I'm from the UK, and I find I'm not sure what's going on with London and the City of London. I thought they would have, they're the biggest shysters out there, as much as Wall Street is the City of London. So I have been expecting that the British government will start showing at least one way or another which way they're going to go, because if you've got Wall Street going into cryptocurrencies, I doubt that the City of London can keep that far behind. The same for Frankfurt.
Well, you lose, and I wrote an article on this that maybe the banks think it's a dirty business, but they want in. It's just like when the mafia was deciding whether to do drugs or not do drugs, but to sell drugs. They realize that if they don't do it, somebody else is going to do it anyway. So they decide, well, let's get in on it and let's try to control it, because there's too much of an incentive for somebody else to get in on it. And it looks like the United States and Japan have led the way. And if India wants to try to block it, they're just going to miss out on all the money that's made on buying and selling and derivatives and the entire crypto space, which is growing despite the prices have gone down. This is what sold me on the concept, not that I'm sold on the idea of digital currencies in general, is that every time the price drops, it doesn't mean that people stop investing in and continue the innovation and the projects. They don't care. They continue. Over the last year or two, even though the price has gone down 60, 70, 80%, depending on whatever cryptocurrency you're looking at, the amount of money that's poured into the area, big money and institutional money, venture capital money, continues to increase, which means they're not pouring money into it in the expectation that these things are going away. They're actually building out the infrastructure. There was one stable coin that raised $180 million to build out so that they can use it as the basis for an exchange. So
and again, I've got these Bitcoin maximalists in my timeline that bitch about anything except Bitcoin. They hate on Ripple,
right?
And I spent a whole post.
They even hate Litecoin
2 years ago explaining the concept of Ripple, which is an interbank protocol that could link fiat and Bitcoin, 10 times more efficiently than what these centralized exchanges do. Any stable coin, Tether, everybody bitches about Tether. I think that Tether does a very good job as another conduit between fiat and cryptocurrencies. So I think,
but there's others now, but there's going to be Gemini is going to have an SEC registered one called.
Yeah, this is what I'm telling you. This is the build out now, and I need to do a future post on this. There's the build out of the mezzanine layer, if you like, between fiat currencies and cryptocurrencies. So you can have a centralized exchange such as Coinbase or Poloniex. You can have a decentralized exchange, or you can have intermediary coins or stable coins such as Tether or Ripple, or this new one you're talking about.
And there's always going to be peer-to-peer as well.
I'm a long-term Bitcoin maximalist, but in short and medium term, what we have is, a dying fiat system with trillions upon trillions trapped in wealth in it. And on the other side, you have Bitcoin with something like 180 billion market cap.
Right.
So you've got these two distinct ecosystems and you need to connect them together. So they connect through exchanges, but they also connect through these stable coins and intermediate coins. So I think the more of these, the better. But you know, a lot of these Bitcoin maximalists don't seem to be able to grasp this.
No, it's because they're Bitcoin.
It's not going to flip overnight. It's going to take, you know, some time.
Well, let me leave you with this thought before we sign off. What I've seen is that any system, any government, any financial system, they always say they have to grow or die. That's an unfortunate thing about government, but financial systems have to grow or die. Economies have to grow or die. If how you're growing your economy is through debt, well, and you have to, like China's at that point now, they realize they have to continue to issue debt in order to continue growing, because if they don't grow, then they slow down, then the economy stops, then they have riots and so on. But what I see is that one of the ways they've managed to keep the financial system growing is through the introduction of central bank money into stock markets, where they've managed not to have the companies grow at fast rates, but to have the stock prices of those companies grow at fast rates. Like Tesla, which doesn't make any money, but who cares? We'll just boost that stock price. We're now creating wealth because it may be an illusion, but Tesla's worth, you know, 20, 50, 80, I don't remember what it's worth anymore, but it's worth billions of dollars, even though it hasn't produced billions of dollars worth of profit. And I think the cryptocurrencies are the ideal way of creating wealth from a bank or financial point of view, because you're not tethered, no pun intended, to any type of profits, you could just say whatever you want to say Bitcoin is worth, it could be worth. It could be worth a penny, it could be worth $2 million. And I think that's exactly the out that the financial system needs to grow, is through, not through real growth, not through profits. You know, you can only raise a house price so much before, you know, people can't buy a ordinary house for $25 million. People are not going to pay $910,000 for Tesla at some point if it's not making money. But people will pay for Bitcoin.
Credit growth today means capital destruction, basically.
Correct.
So what they do is just print more money to pump up the stocks of the companies to make them look, you know, you look at your 401k and it's going up, so everything is, you know, nice and dandy. But the underlying, you know, capital expenditure and actual capital is being destroyed.
And there's a limit to how much you can do of that.
Destroy between, you know, before hyperinflation. But on the flip side, you know, with Bitcoin, for example, I'm not saying this about all cryptocurrencies, because not all cryptocurrencies are scarce, but Bitcoin is scarce. So it's the scarcity of currency that actually creates economic growth by devaluing capital values priced in currency. So this is the... And
we saw that under the classical gold standard of the late 19th century.
You did to an extent, but you must also remember that, you know, the 19th century had some of the biggest business cycles and surging inequality throughout the 19th century. So Bitcoin would be different, but what Bitcoin allows is for everybody to get enriched. As long as you hold the currency and you know you've got a relatively low time preference of, say, a decade or 15 years, then you will become more, you will actually experience economic growth, you know, in the value of the currency, which allows you to consume more capital and have a more enriching life in the 3D reality.
All right. Well, thank you very much for joining me today on the Smaulgld Subscribers Sound Off series, and tell our listeners where they can find you.
I've got a savage political account on Twitter, which is at the handle at ANNRHEFN, and I have also got a WordPress blog, which is Rhenf, which is ANNRHEFN at wordpress.com, I think.
All right. Well, I'll put the links below.
If you go to my Twitter, you'll find it. Yeah. Okay.
All right. Well, thank you very much for joining me, and we'll talk to you soon.
Thank you very much, Lewis. Always a pleasure.
Likewise.